It's up. All right. Thank you. I'm sorry for the little bit of technical glitch, but yeah, that happens sometimes, you know. But notwithstanding, I'm so happy and grateful to be here. A little bit of technical glitch, but yeah, that happens sometimes, you know. But notwithstanding, I'm so happy and grateful to be here. A little bit of technical glitch, but it's on. It's definitely on. I can see and know that it's on. Thank you. Yeah, refresh the page, please, if you can. While I'm trying to set this up at the same time to monitor what everyone is saying on the other system. So sorry about the little delay, yeah, but yeah, I know. Thanks, Nadine. It's on. It's definitely on. Just a little bit of a technical glitch, but yeah, we're on. And let's do this. A couple of other people might have been struggling to log on, but yeah, we definitely on. So what I'm gonna do is quickly get the orders to know as well now that it's on. So if you bear with me a second while I quickly just do that, and then we can get started as soon as possible. Okay. Right. Just gonna do this now. Thank you for logging in, guys. I'm just sorting others to know that yeah, we're back on, and we can do this. Okay. All right, so this is moment. Yeah, some other people are just joining in. Thank you for joining. We had a little bit of technical glitch, so you haven't missed anything. But notwithstanding, I just wanna let the others that are struggling to log on to know. Hello? Yeah, Walin sounds like. Yeah, I've started. Yeah, I've started. So you can join in now. You've got the link, haven't you? I'm gonna send you the live link so you can join in. Yeah, I'll do that. Yeah, you can watch it on. You can watch it anywhere. Once I send you the link, just click the link, then the page is gonna come up. Yeah. Thank you. Thanks. So sorry about this. But yeah, if you give me a couple of minutes, I'm just gonna start back. Bear with me a second. Right. Thank you, thank you, thank you. Got a couple of people trying to log in as well, and they're trying to reach chat to me at the same time. So I'm just trying to get them to understand that, yeah, we're back on, and they can literally join in. So it might take a little bit of minutes to quickly do all that, but yeah, trust me. Right. Yeah, that's it. Get going. Right. Thank you, everybody, for joining in. Without further time wasting, let's get down to the business of the day. What I really wanted to do today is go through trading, go through psychology of trading, go through what it takes to excel in the trading world, and go through a very good trading location whereby you will have high probability trade and low risk. So if you have been following me, you know that I'm an advocate of risk. I'm so concerned about the way people take risk in trading, because that is the number one thing that you can control, and that's the only thing that can make you either a failure or succeed in this business. So as a matter of fact, we've done risk so many times, so now times we're gonna be moving on to doing what really matters, which is the looking at the charts and trading going forward. Right. So I'm just monitoring this on the other system. That's the feedback. Thank you. Right. So my favorite charting package that I use is available to everybody all around the world. Is you can literally use that charting package. Couple of every other charting package that's available, you can just use them to your advantage. Okay, so the one that I'll be using today will be, I'll be using Trading View, and at the same time I'll be using my MetaTrader chart. So basically you can use any chart to trade the financial market, to trade the forex market, to trade anything that is represented on charts. Can be tradable, be it shish kebab, be it anything, corn, sugar cane, anything. The chart should be your friend. In fact, you should be able to understand the language of the charts whenever you open up a chart, and that is what I'm going to be dealing with today, to make sure that I can get you in tune with what I've learned over the last 12 years of my entire life, doing institutional trading and then looking at charts and doing all sort of different chart analysis, trading live, and how we really approach the market in intraday position trading and in a swing trading manner. So first thing first is we are going to have a different approach to the market based on our timing. Yeah, some of us have got time to be able to watch this 247, while some of us we haven't converted this into our full-time job. So the chart is going to have different approaches. The way that we're going to trade is going to be different for each and every individuals. because of our current lifestyle. We have to take that into consideration because of our current lifestyle, because of our current daytime job, the way that we're going to be looking at the chart and the way that we're going to be finding opportunities in the market is the same but slightly different. All right. So, but what I'm going to do is I'm going to bring every means together as one. Yeah, can then dissect into everybody's style of trading. Okay. Number one, I would like you to know that you can be two type of traders. You can either be aggressive trader and at the same time you can be a conservative trader. What do I mean by that? That's just a general classification. The aggressive traders are the ones that literally take chances at any given opportunity. Yeah, they just want to jump in and take chances at any given opportunity. The conservative traders are the ones that are looking for confirmation before they jump in to trade. Okay, so sometimes we have loads of impulse to jump into the market and make money from the market. Okay, this is not about having impulse or about having ego. This is about being patient. Okay, if you are looking for a get rich quick scheme, well, we have an opportunity for that as well, if that is what you're looking for. But if you're looking to be able to develop this skill and understand it and have it in your control, anywhere that you go, it becomes part of you, it becomes your life, it becomes a way of life for you, then this is how to approach it. If you are looking to just take advantage of what professionals are doing in a manner so that you can make money from it, like I said, we have those kind of opportunities too, whereby you jump into signals and then be able to take trade from signals. And at the end of the day, make sure you do not blame whoever provide our signals, because they are doing their due diligence to make sure that at least you can go in and out of the market, despite the fact that you have little or no experience. Okay, so one moment, please. I need to go into this quickly. Can everybody see my charts? Can everybody see my screen? Can everyone? I'm just going to type that in. See my screen. I know I've got a couple of viewers. Hi, Ruth. Good evening. Yeah, I just want to make sure that people can see my screen. Okay. So if you can see my screen, can you please type 111? If you can definitely see my screen, can you type 111? If you can see my screen, type 111. Right. Ruth is responding. Right. You'll see the chart in a minute. One moment. Right. I believe you can see one of my. 1 second. Please. I'm not sure if I have shared my screen, but yeah. Screen share. Okay. Present everyone. Okay. So that's screen sharing, presenting to the overall world now. I got so good people watching this live. Thank you for tuning in. Right. Okay. Yeah, so people can now see my screen. All right, guys. Do not hesitate. this is a free event, so do not hesitate to invite friends and families, prospects onto this event for people to be able to join in and watch this. Bear with me a second, let me get one bottle of water. Give me back my phone. Right, sorry about that. It's a bright and sunny day, and sometimes you just need a little bit of water to keep your throat moving easy. Okay, thank you. So now that you can all see my screen, as you can see on this chart, what I have on is what we refer to as dollar index. All right, this is called the dollar index. And what is the dollar index? Dollar index is a gauge of all currencies that is paired with the dollar. Okay, so dollar index is a gauge of all the currency pairs that's paired with a dollar. So this is the chart that let us know what dollar is doing and where dollar is gonna be going at the same time. All right, so with this we can definitely see clearly, and this is a monthly chart as well, we can definitely see clearly how price has declined from quite some time ago in 2002, and then all the way down here in 2008 during the recession and stuff. And now we can see that price actually move away from all this area, and this is where we are currently on this part of the chart. And what does that mean for the dollar? And that is one questions that we have to understand. The reason being is the dollar is one of the financial instruments in the entire world that is a reserve currency. Every part of the world have certain amount of dollar in their reserves. Okay, and because dollar is a reserve currency, it kind of impacts the way every other currency moves. Okay, so my majority of the seven major pairs are all paired with dollar anyway. So looking at this chart, we will be able to see clearly, very clearly, that if I draw a box, for example, around there, yeah, and look at this. This is beautiful, isn't it? If I draw a box around there, at this last two tops, that's where we are currently sitting. All right. And what does sitting right there means? Quite a lot, because that literally acts as what we know as support and resistance. If I then shift it up higher, you can see where these two are sitting, and currently we are trading above that area. Okay, so if we're trading above that area, it means we've compressed into the box. Now we are trading higher above, which means dollar has got a little bit of strength in the last couple of few months. Okay, but where the concern is if you look at this particular day, if you look at this particular month, this monthly chart, bear in mind, yeah, it's a monthly chart. So if you look at this particular month, which is last 2 months, we have closed positively, yeah, with a strong impulse or strong buying power up, okay? And then if you look at the next month after it, I have what I can refer to as almost an indecisive candle that does not know whether to move up, yeah, because we have a long wick up, and then knows whether to move down because we have a long wick down. So that last month of June kind of mean a lot to us, and that is what is going to be impacting this particular month, okay? Because we have a little bit of an indecisive moment last month, yeah, based on all the events that would have happened, based on all the data that would have come out, yeah, over the last 2 months, we have a situation whereby that month of, give me a second, my chart is, yeah, that month of June closed a little bit indecisive, and this is going to have an impact in the way dollar behaves in the next coming few days. Okay, this is definitely going to have an impact in the way we behave going forward. All right. 1 second. Right, and when you look at this month now, you can literally see that currently we are still indecisive. Okay. So it's the event of last month that is literally giving us this situation, and this situation of indecisiveness is not a problem for us. The only problem that will occur is when you have indecision, you will find yourself in a position whereby you might not make money. Okay, because 1 minute the chart is up, if you are trading longer term, you'll find it very difficult to make money in an indecisive market. But if you are trading short term, then you can make money in a short term manner in the market. And already we've seen this from last month. We've seen that this is what is going to happen this month, that this particular month we're going to be ranging. So until wait me a second, I think someone is finding it difficult to log on. This technical glitches can literally make life easy at the same time. 1 second. Yeah, I think this is the problem. Somebody said the emoji. Sorry. One second. Right. So going forward, the next thing that you want to do, once you know what dollar is likely going to be doing, is to have some tools in place. Yeah. The first tool that I'm going to give you today is what we use, the forex volatility, for you to know precisely, say like at any point in time that you are joining into the market, if the particular currency pair that you are looking at has moved so much beyond your beyond the levels that you should beyond the level that you should join in from. So the first one will be here. Please take note of this. I'm going to write it in the chat room and you can take notes. It's called matter.net. All right. So with matter.net, let me just copy that and paste it in the chat room so that you can be able to make use of it and then keep it for yourself. So just copy that and paste it in the chat. Right. 1 second. Let's see this. Can you let me know if you can see what time? Right. So what you do with matter.net, you come to Forex volatility, okay? And in Forex volatility, what you have is all these currency pairs, all right? So what I tend to say is this is I'm showing us the average movements that we can get on the currency pair in a day. All right, so with Aussie CAD now, okay, say 1 second. Can somebody give me their favorite currency pair? Favorite currency pair. Favorite currency pair. Right, I'm just waiting for someone to send me their favorite currency pair so that we can use that as analysis. So at least I know that this is interactive. I know that people are benefiting. And I know that while I'm waiting for that, anyone, any favorite currency pair? I'm waiting for you to respond on your favorite currency pair. Right, so GBP USD, thank you. So what we'll tend to do is over here, we can write just a little period of about 4 weeks, yeah? So over the last 1 month, what has GBP USD been doing? So on daily basis, yeah, GBP US dollar is averaging about 99.26 pips, okay? All right. So that is one of the two that I want you to take note. And I'll show you how this literally work. And now you can take advantage of this. So if you take note of matter.net, all right, I'm going to try and pop that into the room. Matter.net. And you want Forex volatility. Forex volatility. So you know, in a whole day, there's no need for you to be anticipating something that is not there. Over the last 4 weeks, what the pound US dollar has been doing is just within the range of 99p, okay? Right, but the most important tools that you need, all these are technical. The one most important tool that you need is something that we'll call the calendar, yeah, and that's the fundamentals. So there's of trading. You can approach trading from a fundamental point of view, and you can approach trading from a technical point of view. So the fundamental point of view will be from using economic calendars. So I tend to use two of them. The first one is 1 minute. The first one is Forex Factory. Yeah, it's the same with Forex Peace Army too. Yeah. In this business, you're gonna have to have tools. Without having tools, you find yourself just trading blindly. So on Forex Peace Army, all you have to do is go to tools. Yeah, we're recording this. Yeah, it's been recorded so that people can have access to it. Go to tools and you go to Forex. Economic calendars. Okay, that's the second tool that I'm going to be empowering you with today. So on this particular tool, on Sunday, today, there are G20 meetings going on, okay? And this is where the global G20 meetings are attended by finance ministers and central bankers from 20 industrialized nations, including the nations, Canada, Italy, France, Germany, Japan, the UK, and the US. The meetings are closed to the press, but officials usually talk with reporters throughout the day, and a formal statement covering policy shifts and meeting objective is released after the meetings have concluded. So you expect that today, based on this particular meeting, the big boys and girls are in meeting, having conversation right now as we are speaking. Yeah, and they are giving reports to reporters who by morning they will be publishing what was talked about. Yeah, what is important in this meeting are that particular formal statement that will be covering policy shifts. The moment there's a policy shift, it tends to affect the market. Okay, so that's the reason why you need this tool of Forex Factory. The next tool that you're gonna need is Forex Peace Army, and what that does is it literally just give you the same thing that you're gonna be getting on Forex Factory, but with a little bit of more elaboration. All right, and the reason why I like this is because you can literally get things like 1 second, full insight into what is going to happen. So you have on Monday Euro, CAD, Euro, USD, Aussie, Pound. What does this represent? It represents that at this particular time, 11 a.m., yeah, in the Eurozone, okay, there will be a report from Germany Bonds Bank monthly report, okay, DE Bonds Bank monthly report, and it's at a particular time, 11 a.m. So what is this likely going to affect? It's going to affect the euro as a currency against every other currency. The same thing applies to CAD. At 1:30 p.m., you're going to have CAO sales, and this is literally going to affect the CAD, okay? But the more impacts they're going to have in the market is how deep their color is. You see, the one with the red has more impact than the one with the orange and yellow, okay? So the one with the red are the ones that we tend to concentrate our efforts on. On Tuesday, the same thing. PMI Purchasing Manager, Purchasing Manager Index, PMI Purchasing Manager Index in manufacturing industries. The report is going to come out, and this literally show the health of how businesses are ordering large, expensive goods, ranging from aircraft and big things like that, warships, anything that is magnificent, and other things that big businesses order. All right. So if purchasing manager, if they are ordering so much things, it kind of helps the economy to grow faster. But if they are slowing down in their ordering, in this case, where this is where you're gonna see it. We have a actual is what we are expecting, forecast is what we have forecasted that's likely going to happen. So over here, the details that we have is a forecast, all right? And the forecast is what the actual is going to be benching on. If the actual literally comes out much more better than the forecast, then it's going to affect this currency of euro positively at this time that is released in the morning. If the actual comes out way lower below expectation, yeah, then it's going to affect the euro negatively to a certain extent. That is just the normal correlation. But the way that we actually trade this is sometimes the news will come out positive. And when the news comes out positive, the chart is going to be dropping, okay? So you have to rely majorly on what the price action is telling you more than what the news is telling you. Because sometimes before the news, price would have moved in anticipation of the positivity that the news is expecting. So that after the news actually come out, the surprise, the price would have discounted the effect of that expected surprise into the market before the actual news comes out. So when news comes out, price meets tend to start to drop. Okay. All right. So I think we are getting there now. Let me see this quickly. Right. Let me do this again. So I'm going to refresh my chart. I was trying to sort out this chart to make sure that we can do lots of charts today. All right. So this is my chart. Let me see whether we can do a magic or from above. All right. So what I want to do is have multiple charts on. And what does that mean? All right. So it's the same chart, but we're going to have it in different time. In different time frame. Okay, so we start from monthly. Okay, and when you have your monthly charts, then you look at your weekly charts, yeah, and then you look at your daily charts. Okay, and then you want to look at say about 4-hourly charts. All right, and then you look at something lesser than that, say about 30 charts. I love the 30-minute chart, and yeah, you can now look at a smaller time frame again, 5 minutes or so. What I want to do again is I like 2 hours charts, so I'm gonna have 2-hour chart somewhere. So let's assume this is 4-hour, and I'm gonna turn this to my 2-hour chart. Okay. Right. So this will remain monthly. Wait a second, I'll do this as weekly. I'll tell you the reason why it's important for you to be able to see market from this particular perspective. Daily, so now 4-hour, now 2 hours, now hourly, or yeah, and 6 minutes, and 5 minutes. Okay. So what I'm gonna do is I want to sync on all charts, intervals, time, course here. All right. It doesn't really matter what pair that we are looking at, but yeah, we're gonna get to the pound dollar in a minute. This is a monthly chart for us that we are analyzing, right? And in this monthly chart, I'll go through some few things. So if I expand it a little bit, I don't want this to be hanging off in a way. All right, okay. And then today I want to try and give us a powerful trading technique as well, if we choose to use it at any point in time. So this is my dollar index. So we've covered the Forex factory, the Forex piece. I mean, those two are important for economic news. Let me pop that into the chat room so that you can copy it and just have that as an important tools at your disposal. 1 second, I want to find a way to get this onto your charts, events. Like chart. So yeah, I've seen that. So you need FOREX factory and you need Forex piece. I mean, so many other tools as well, but I mean, this is just a way of me giving you the tools that I look into. All right. Okay. So at the end of the day now, our first thing that we do after we've checked the Forex space, I mean, check the Forex factory, is we start to look at what the dollar index is going to say. And this is how I'm going to analyze the dollar index for us. I'm going into the new trading day. So I've seen this chart. Yeah, I use a couple of tools on my chart for me to see precisely where the price is going, for me to not have a single element of doubt in what my analysis is saying. I'm not going to be reacting based on what I'm thinking. I'm going to be reacting based on C. Okay, so from this year 1985, the only thing that I can see as of dollar is actually in a downtrend, yeah, on a very, very longer time. And we're talking about the span between 1985 to current year 2018. If you look at that, that's over 30-year period. So over the last 30 years, the dollar has been struggling. So we will now try to tend to be breaking that down into current trend, yeah, from a major trend. First few questions I ask myself when trading: number one is, you only do two things in trading, okay? The two things that is expected of you. One, quantify your risk. Quantify your risk. I always say this in cash terms. So you have to know how much you want to lose. You're willing to invest, how much you are willing to risk. Take probability trade, okay? Probability trade. Okay, and I'm going to show us how to do this. These are the two things that is expected of you. Only these two things. Every other thing can be very, very mental and time consuming. So how do you quantify your risk in cash terms? I believe we've gone through risk so many times in our live class. And then the way to quantify risk, we've done that, which is our 2% rules for all new. Yeah, and taking high probability trades are the part of the trading where we're going to be dealing with today. Okay, so the first questions that I will ask myself, I have a couple of things I would look into before I'm jumping in to take a trade, and it would kind of become an habit if you start practicing. Number one is, what is the major trend? Okay, what is the major trend? And the answer should be simple. In this case, the major trend is down over a longer period, all right, over a longer period of 33 years. That's huge, isn't it? So I want to be clear so that when I see that major trend false meaning, I know what is coming in. Then number two is, what is the market condition? Okay. What is the current market condition? So my current market condition can either be ranging, all right, which means it's consolidating, or trending. All right, so in this case now, let's look at what is the market condition. So many ways in which we can look at that well, yeah? So we've known the major trend to be down, all right, the way price is going. Currently now, on the monthly charts, we can see, for us to be able to identify a trend, we have to see the kind of wave that the price is producing, okay? Currently now, we can see we have a move down like this. I hope everybody can still see me. Right. Mind. So we have this move down. Let's say we move down like this. Okay. This is what is appearing and visible. The next thing is have a move up. Okay. Then I'll be able to show you how to identify the subtle changes that you need. And then you have another move down. Okay. And then you have a move up. What is a trend, basically? So a trend, this is a trend, is a series of higher highs followed by lower lows. In case of an uptrend. Yeah. And a series of lower highs followed by lower lows in case of a downtrend. Right, because we have two major type of trend, you have to define both of them. So a series of higher high, let me break it down. Right, so this is a trend right here. Let me find this if it's possible. It's not possible. I'm just gonna make it blue. Oh, sorry. I just only want to make this blue. See if I can make it. A lot of it is gonna change. All right, so but let me break it down again. All right, so that's the definition of a trend. The third thing that I say looking at is now is the market. What is the market condition? I want to say whether this market is ranging or consolidating. Over here, this is the way the price is now going. So we come from this high, this low, and then we move up a little bit in a consolidated effort, and then we resume this trend down. Okay, so if we are in a downtrend, we've got higher, we've got a low here, we've got another high here, which is lower than this high, and then we've got a low here. So this is automatically a downtrend to me. Okay, and in this case now we have this, and we're moving sideways. And I'll show you how you're gonna see that this is more than a sideways move. We're not literally exhibiting the properties that we are exhibiting from here to here anymore. So we move up to form a high, we form a low right here. This low, if the trend is continuing, we should have a lower low. Okay. So, but because the trend is not continuing, we kind of form a low, which is not consistent with the downtrend formation. So we move up again to a low high, all right, lower than this high, and then we form a new low here. This could have been its definition of a downtrend. If we move up over here to form another new lower low, sorry, new lower high, and then we come down to form a new low, we would have continued a new downtrend here. But in this case, that is not the case. We literally stop there, and then what we intend to do is we move up. All right. So over here, where this box is, and this is the significance of this box, we can see that the trend comes all the way down in a downtrend. Now we've got what we can call a consolidation or a ranging zone, okay? And that occurs after this downtrend. Out of this ranging zone now, what we are saying is we move up. And the way that we move up, we kind of move above this lower high here, okay? And this lower high here signifies something that is very, very important. The moment we start to see a move above the particular low high that is holding this downtrend, that is what we refer to as trend change, okay? So when we move up now, the next thing that we see is we move down. Let's assume we move down to here, and then we move up again to form a new high. Sorry, bear with me. All right. And this is a new higher high. And from here, we can see when we have what the beginning of the trend at this low, we form a high here, right? We form a low here. Right here now, where we move up to, form a new higher high. So this high compared to this high is higher. And then we form a new lower low, a new higher to this low compared to this low is higher. Then we form a new higher high here. All right. And when we form this new high, we can literally say, wow, the trend is going up. Okay. Now look at what that presents to us. Now we have this particular low, and this low is way below this low, okay? Right. And that can mean quite a lot. And then we move up here, all right? So in defining what a trend is, in defining the current market condition, we can literally see, if I blow this up on this monthly chart, the way that we've moved, that we exhibited the trend there. Now, the popular trend that exhibits comes down way below this low, okay? And this low, if we manage to come down below this particular low, and these are your good location, this is how you find your good location. If you manage to come down below this particular low that we have here, that shows you that, okay, the only thing that I want to be doing below this low is be a seller. Okay, so all the move that comes down here, then you want to be selling that. Okay, if price comes back above this low, all right, then that means the trend is changing back up. Okay, price should be finding it difficult to come back above this low if this literally want to resume down for now. All right, so what we then see again is price has tested inside the box and come above this low, okay? And it comes above it positive. Remember this particular candle sharing with you at the beginning, okay? Are you all with me? Can everybody hear me? Let me check. I don't want a situation where I'll just be talking to myself. All right. Okay, fair enough. All right, so if you can hear me, I'll just carry on. So this particular low here, you want to know the value is low, okay? Thank you. Want to know the value of this low? The value of this particular low is 91.92. Okay, so that is an important number for you. You want to know that the moment price comes below that 91.92, you want to be a seller. The moment price back above it, then you are changing your bias from being a seller to being a buyer. All right. And then even if you're going to be a buyer, you want to know where you're going to be a buyer to. Okay. And that's where you're going to be looking at other on the charts. See that when price comes down to this low, there's need for price to respect it. Yeah. Price keep pushing back up, push back up, pushes back up, from this low. All right. So price respected this low to push back up. But fortunately, unfortunately for price, it literally breaks it. And unfortunately for it again, all the people that thought that this price is going down, price push back up again. And when price get here, which zone is price? Price finding it difficult to push higher. Okay. And then you want to see that the high is around here. This is the high where price is finding difficult to push higher. All right. Right. So literally now you know this area. And what I can do is let me remove it and make it much more glaring in a way. So when you're looking at your chart, you can see this area clearly. So now you now have another point that you are looking at that at 95.15. If price managed to move above here, yeah, then you want to continue to be a buyer. And one thing that I want you to understand is it's not about higher highs and higher lows for uptrend. Exactly. Higher lows for uptrend cancel. One thing that I want us to understand is this. We literally want to see price close, have a solid close above 95.15, okay, before we can start to buy. And I'll show you. Remember, this is a monthly chart. You don't actually do your buying and selling with just a lower time frame. You want to see that big point on a higher time frame. Okay, once you note that point on a higher time frame, you will now then go and see how best you can capitalize on the opportunity on a lower time. So currently we've analyzed the monthly chart for the dollar index. Yeah, and we know clearly that if price push up above 95 or 15, this area here, that is when you will see a lot of people start buying the dollar pairs. But for now, if we are keeping it below here and we are drifting down lower, then we will remain a seller in the dollar to this area. So this is how the back and forth works. You will see that price will now want to revert back to this area, and at this area again, it can possibly make another decision to go up or go lower. All right, so now this is how I approach it. Yeah? And the way that I'm going to approach it, I want to do it in the other currency pairs that we normally trade, which is different from the dollar index, because quite a lot of us don't literally know about the dollar index, nor literally trade the dollar index. But yeah, there's a basket of all currency that has shown me this week that, okay, I can see the strength in the dollar. I can see what dollar is trying to do. I can see that dollar is trying to move up, but we have a month that is delaying us from moving up, okay? And I can see that if we're going to literally move up, there's a particular area where we have to literally close above. You can see that when we push to that area, we bounce back down. We push to it, we couldn't close above it, we bounce back down. We push to it again this month, yeah? We're literally pushing higher, okay? So we might end up breaking up, because when you can appreciate the high of this last 2 months, 95.03, and the high of this one is 95.15. 93, and the high of this one is 95.65. So we literally testing the highs more than we testing the lows on the dollar index. So we might end up finding at a point in time whereby we're going to break this either during this new week, or we're going to literally shift down. So that's what we're going to be watching for. We're going to be watching for a break of here. We know when we see a break of here, and then we are literally going above the break of here, then obviously, and we close above the break of here in a smaller time frame, say the 4-hour time frame or the 1-hour time frame, that is when we become a solid bias of the dollar going into the new week. All right, so what I want us to look into now is how to use the first tool, the math.net that I gave us, how to use it in the new pair. So we know what we are expecting in the dollar going forward. What we're going to do now is see what we're having in the pound USD. So already we are anticipating, we know where the dollar is likely going to the pound USD. What I want to do is I want it to cross all symbols. All right. Okay. So this is my British pound. Sorry for all these lines. Literally, I love to trade with horizontal lines. Yeah. And I'll show you how I manage to get my horizontal lines, and you can then appreciate using the horizontal line to trade. So this is a chart that I've already pre-worked on. Yeah, that's why you see so much lines on it like that. And this is a monthly chart as well. Okay, so if I literally idle this line for us to see what trend is in the pound going forward into the new month, and I don't squash the chart, it's literally good to squash the chart, but at least we can build a picture of what has been happening in the past, where we are and where we are literally going. And one thing that I can show you clearly is on the pound dollar, the longer term trend is, sorry for this, those guys are popping up again. All right, so I'm gonna add them again. Sorry. The longer term trend is literally down, okay? And then what we can see is after we have this high, we have this low over here, we push up to have a lower high compared to that, and literally we're pushing down to have a new low. So we've made a new lower low compared to that, and we push up to make a what? To make a lower high compared to that. And literally what we are expecting, if this trend is going to go, is we're literally going to see a new low that is going to be lower than this. And this is how you picture into the future what the future of pound is going to be. So you can be seeing the pound as, wow, it's likely going to be very bleak for this currency. Or you can see the pound as, okay, most probably it can come down like this, make this new lower low, and then you can be expecting the price to come down somewhere. Let's say, let me blow it up. So a congested zone. And you literally want to see that pound can do that. If pound literally comes down and drifts down to congested zone, say for example, zone like this, can you all see my cross here? And pound drifts down to congested zone somewhere in this area. And pound can literally get there, 12600 area. If pound gets to this area, then we find a reason for aggressive buying coming into the sterling, then we can start to push higher. But for now, everything is looking bleak. So we're not going to be complicating anything more than what we are seeing, that, okay, the pound is moving down, it's moving low, it's drifting lower. What happened the previous month is what is going to affect this month, okay, in certain extent. So we have this strong bullish bearish month, yeah, so price literally pushed down, okay, on this strong bearish month. Following month after, the price kind of find it shaky, just like the way that we saw in the dollar as well. So the pound is going down, but it's kind of finding it shaky to go down. Well, the only thing that we are saying is, and we're literally pressing down a new low, lower low, lower low, lower low in that monthly view. So but this particular month now, we are doing the same thing that we are doing in dollar. We are not 100% sure whether we want to really come down, so we are a little bit indecisive. We've got 8 days or 9 days before the month closes. Out of 9 days, we're going to literally have about 7 full trading days in there. Those 7 full trading days can literally either push this price further down or reject things up. So what you appreciate is this. If pound US dollar is coming down, okay, that means the dollar has come to have strength, number one, okay, or the sterling itself is weakening, number two. Yeah, so those two scenarios can occur whereby the dollar starts to have strength and then literally drawing the strength of pound down, okay, or the pound starts to become very weak or literally drifting down without anything literally happening in dollar even. Okay, so we can see such a scenario whereby we come down like that. But so how do I make sense of all this information? How do I make sense of all this jargon? And that's the reason why I use my horizontal line. And what do I do with the horizontal line? I kind of look at the chart in a structural manner. Yeah, I kind of see the chart as a building block, okay? You know, like a leg set, okay, whereby you mount one thing on top of the other. So if we look at the chart from here, yeah, we can literally see that price came down. Yeah, this is the recession during 2007, 2008 recession. You can appreciate that this is December 2012. Price comes down, okay, but we found one low here, yeah, and those low, I want to look at them significantly in a manner whereby when I find this low, price tend to push up. Okay, all right, so then we literally fall all the way down, and at this particular low where we fall to, that is where the buying begins to push, and this low is significant to me to push price back up. Okay, and when price pushes back up to this area, that's another significant area for me. Okay, and all these significant areas are the areas that I'm going to be employing into my own trading decision when I start to make a trading decision. Okay, and I'll show you how to do that. All right, so when we have a situation like this ranging situation, I want to know the high and I want to know the low area. I want to know the values of those high and those low areas. They are good trading location. Yeah, take notes. Those are good trading locations. All right. So what we then get, I want to look at where we are currently trading and look at the kind of structures we have around there. What is holding price and what is where price is breaking from. So when I look at here, where prices currently is here, I can see that we have this little point here, which we've literally traded below. So what I'll do is on this chart, I can put an horizontal line there. But what I consider mostly after all those horizontal lines is I look for those areas that is closer to price. All right. In this case, I can't see no immediate structure behind that is closer to price. There might be on the data of the 1970s that I used to have on other trading packages that I have, but for now there's nothing, so I'm not going to worry myself. So what I'm going to do is on the last 4 months high and low, okay, I'm going to stick a line on that. All right, on the last 4 months, which means this month, the high that month give, there's a reason why we have that high. You have to start thinking the way the market was. There's a reason why the market created that high, yeah, and there is a reason why the market created that low. Okay, so for the fact that you don't know the reason why the market creates that high or that low doesn't mean that it's not significant. Okay, so you have to look at those areas as a significant area, and I'll tell you why in a minute. So you remember when I talk about the tools that I gave us, which is smartaf.net, yeah, we said the price cannot make more than 99.26 pips over the last 4 weeks. You will appreciate that if I look at the last 10 weeks, yeah, and look at the charts here. So the last 4 weeks are 1, 2, 3, 4. So the average that the price has been doing on daily basis is about 99 pips on this move. Okay, if we look at this, if you play with it and you put 10 weeks, excuse me, a go, and you do refresh, all right? Let me do this again. Let me a second. So this is a 10 weeks one. I'll just put 10 weeks there. That's definitely 10 weeks, and I'll put 10 GBP USD. Okay. So GBP USD in a 10 weeks period is still unchanged. If I put, say, for example, 20 weeks, okay. One second, let me use my tablet here. Tablet. I want to pinpoint why it's important for you to understand this. So forex volatility. So because on some day you'll be looking at yourself and be like, I just want to buy pound. I just want, yeah, you can buy it, but if the price has finished the move that it wants to move for the day, what's the point? All right, so over the last 20 weeks as well, we can see that we are now averaging more than 99 pips every single day. So if we do say like the last quarter, we have how many weeks in a quarter? We have 4, 16. So if we do half a year, we're gonna have 24. So let's say over the last 56 weeks, that's a whole year. Right, so over the last 56 weeks, what we can see that the pound is just averaging the same value. And that you can see on the chart that the chart is literally moving gradually up. So how do you make that into what? How do you make use of that? So the first thing you want to do is you want to put your lines on the last 4 monthly highs and low, and mine are already there. Okay, so if I do this, if I expand it to show you precisely what I would do, and what I've done is I've got this particular line. This particular dark brown line, yeah, what that one is touching is that significant area there where price push back above when price touches there. So currently in the months that we are in now, we are nowhere near that area. Okay, so I'm not going to worry myself so much about it. Where are we? Where we are will be where this blue lines is right now. Yeah, so the last month we have this high, my blue line is on that high, and I've got another blue line on the low. Okay, and then what I'll do again is the months closer to it, I've got this low, my blue line is there, and up here as well I need to have a blue line there, but because that is a bit far away from price, I'm not going to bother myself about it immediately because it's a monthly chart. So I have two important areas on a month that I'm going to be concerned about, which is that high at 134.72 and that low at 130.49. I'm sorry, 132. sorry, I've got that high, yeah, at 134.72. You can write it down. And I've got that low at 132.04. You can write it down. So, and I've got another area of this low at 130.49. Okay, so those three areas are important and they are very good trading location, because you have to appreciate that when price pushes itself up to this area, yeah, definitely there's some traders there. It could be a bank, it could be an hedge fund, it could be a pension manager that literally push this price. They start the push of this price and in consensus all the way down, okay, before price tends to balance near the low of previous month. Okay, so those people that are there don't think they've left the market. Okay, they are still there. For one reason or the other, they are watching their position as well. For one reason or the other, when they push price down here, some of them take profit and price bounce back up to here and stay here. Okay, so this new month now, you can see that price has traveled up. Yeah, this is where we open. We've gone up above this one, this blue line, and then we've gone literally up to almost this line here, but we didn't reach. Then we shoot back down below this line, okay? And then now we've traveled all the way. We've come down below here as well and form a new low here. But look at where we close. We literally close above this line, all right? So what I'm going to do is on monthly, to make it more glaring and clearer, I'll delete what I've got there before so that you can see the important areas and you can note them down for future trading purpose. So, and this is how you approach trading. Yeah, you don't approach trading like jumping in and making money. You want to do it in a professional form whereby your strategy, you can follow it to the letter. Okay, so once you have this your point, you have done this analysis yourself, you've put the important lines on yourself, you've known the numbers probably by heart, or monthly the areas that are good trading locations where you are. And what this good trading location does is they literally give you low probability, they literally give you low risk, high probability trade. What you want to use them for is more or less like, okay, if I'm on this side of the charts, if I'm above, if I wanted to close above this line, I'm going to be a buyer. Yeah. Okay, and then if you want to be a buyer and just have 20, 30 pips, and that is good for you. In this case, when you look at it, if you are a buyer here and you want to gain maybe 30, 20 pips from here, if you are a buyer, you have an opportunity to make 1,524 pips from that place. And the moment price starts to come down below it, say for example from here, the first target is, sorry, 1 second. From here, the moment price starts to come below here, all the way down, yeah, that's 1,400 pips to here, to the low of that, you have 2,000, sorry, it's not 1,000. So that's over here is about 144 pips. To here you have 237 pips that you can make. So your first stop will be somewhere around there, because you know you have this blue line here, you have this immediate brown line here where price can literally bounce off, and then price shoots down to make 237 pips. But if you have the idea of this location and know how to employ it into your trading, you will see how powerful trading will become for you, and now you can consistently pull out profit out of the market. All right, so that is it on monthly. The next thing you want to do is literally go to weekly now. Okay, so on a weekly chart, you literally want to do the same thing. Okay, so this is our weekly chart. You can see let me just squeeze it for you to see. So the same thing that we are saying on monthly, but on a weekly expanse, this is what we have. 1 second. So this is where we make that lower high, okay, compared to the high that we have from here. Yeah, but the weekly kind of break it down a little bit more for us, that we have a high here, we have a low here, we have a lower high compared to there here, then we have a new lower low compared to this one, then we shoot up somewhere around there, we have a new lower high, and then we come all the way down literally to have a low somewhere here before we have these three torches, and then we progressing up literally, yeah, and progressing up, we get stopped with those two touches over there, and then price shifted down. So what do we have? So on weekly now, again, we're going to have to look at the weekly chart and say to ourselves, let's pop our horizontal line on, okay? And then now this is going to become more meaningful. You can basically be trading with horizontal line alone instead of, in order not to complicate things with too many informations. All you know is those horizontal high and low area. There are some significant traders that are pushing the price from there. And the only thing you want to do is in trading is you cannot move price. You cannot even push price a peak, okay? Or else you start playing with billions in volume. That's the only time that you can move price. So if you have 100,000 in your trading account, believe me, you are a baby in this game. If you have £100 in your trading account, believe me, your £100 will get missing in this business without the markets even knowing that that money passed through it, okay? Because this is a $1 trillion market. All right, so you want to approach it in a much more sensible and professional approach, the way that is going to help you to gain financial freedom by understanding how these charts work and how to make good use of it. So what have I done? I've literally popped a line on the highs, on the lows and the highs, the lows and highs, the lows, the highs, the lows. So on this last 4 week low, 1, 2, 3, 4. So this is going to be my 4th week, and I'm going to pop a line there as well. Okay, so you will now be seeing that some of these lines, they are literally joining together, okay? They are in the same area, and those are good, solid area for you to start looking at critically, where you can make decision in the new week or in the coming trading days. When you are seeing those aligning, like areas like this, where you are seeing the induction, you literally know that if you have any price on a 1 hour chart that's closing below here, the next thing you want to do is just be a seller, yeah, to this area, and then if it continues, then to this area, if it continues to this area, if it continues to that area, and you will get to understand how powerful this is as we're going. But if you have it above here, yeah, then you know that you are a buyer all the way to here, to here, to here. So what this tends to give you is, it does not only give you entry, yeah, it gives you both entries and gives you exit as well, and at the same time targets, okay? And this is how I like to combine a trading system. I like to combine a trading system in such a manner whereby all the things I'm going to be looking for in a trading system to be in it together, then I will try my best to now be able to follow it according to our plan. Okay, so the next I'll do now is after popping my line on the weeklies high and low, I'll pop it on the daily high and low as well. Okay, so I'll then move on to my daily chart now. And one thing I will look carefully is I want to know what happened the last week. Okay, and when you look at the last week, we look at what happened the last month, and we see, the last month we see that it's almost an indecisive candle. This month that we are in, we see playing indecisively as well. So I want to look at the way this candle close and just build a mental picture of what I'm expecting in the new session. So what we've seen is we've literally come down to the low over here. We are popping line on, and then we move above one particular important structure right here. Okay, we move above that to important weekly highs and low. Move above weekly lows area here, and we close above it. Okay, so when we close above an area like this, there's one thing that I'm going to be looking at is positive, because we've closed above. Yeah, I'm going to be looking into this, like I said, price has literally shifted just from one, two, three, four, five, six different important price point area of high and lows of important month, week, high and low, and that's where we close above. Okay, so I'm looking at this positively already. All right, then I'll shift to the left of my chart as well and look at what is going on. I want to note the highs and low, and you can find your swing highs and lows on the weekly and monthly chart. So I know for a fact and for sure that this is where I have the most recent swing low over here. Okay, and price move up to give us high over here. All right, and then we are trading a little bit down into a trend line that we formed from this low, with that low, and then move up, and then we that's where we are bouncing off currently. All right, so we have an important area over here. Look at this. This is significant now. A few questions that I ask myself that I'm popping up the other time that so we have this area. Give me a second. And this stuff are powerful. You know that we have that area, okay? And we are trading back into that area right now. And then when we go into that area, that's where we see that policy shifts. Yeah, that's where we see the shift back up, okay? And close the week way up above all these important six significant point area. All right, so I'll move into daily, but before I do so, I'll move down and go and check my daily charts and check my analysis on my daily chart as well. I wouldn't forget what I've seen on dollar index, right? That dollar can be pushing forward, okay? And then, which means that can literally affect them, the pound. If dollar is having strength and the pound is becoming weak, then we can know that that can literally affect the sterling. So this is my weekly, my daily chart now. So based on what I said last time, based on weekly, all the way the price gets down and push back up, we want to see clearly what is happening on the daily around this important zone, important swing low area. All right, so this is where we are currently. Let's see. So we are sitting right on this line, but how do we sit on it on daily? Look at how beautiful this is becoming now. And now you can start to combine those together. If you remember that move up in weekly that I said that once we get to this area, price start to push up. So we touch this particular low, yeah? And then on this particular day, the way that we traded is we traded way high above this. If you remember this line, let me go and show you where we get it from again. We might not see it on daily clearly like that, but let's look at it on weekly or monthly and see how far that line has to go. All right. So I think that line is an important structural point. Second. All right. So, give me a second. Let's now the chart. All right. So here we are. This particular brown line is from this significant low that we got here before we start to push up. Okay. All right. So with my horizontal line, I will go on daily now, and that is where we find this line. And if I go on daily, let me see my daily chart. What is a daily chart? All right, so this is my daily chart. So the brown line is the significant low that we see when we come down, and that is the last low that's holding this area together, okay? And if that area is so important, when we get to Friday, what we did is look at the way price come down to it, yeah? And price comes down, and that is where we bounce back up, right? From that particular brown area. If you have this golden number to yourself, 103027, and you are trading, if price comes below it, you sell. If price goes above it, you buy. Yeah, and you start testing that alone with little currency, with little risk for you to see how this particular area works. You will end up realizing that when price comes above it and start to go up, you're going to be part of that move up. The only thing that I want you to understand is when price is below it, you are a seller. When price is back above it, you are a buyer, and you can practice that. So what do we see? Is we see this sharp move up, yeah, and this is this kind of a move. Yeah, we can see that this move, the way that it moves so strongly that it literally engulfs 2 days. 1, 2. These 2 days moves that happen, they are the body of these 2 days move. One particular day engulfs that moves. Yeah, so we end up closing above this. We end up closing above this area. We end up closing above this area. Okay, so coming into the new week now. All right, this is what you want to do with MATAV. Now you want to check the high. What is the high of this particular candle? It says 103139. Okay, and this is how you use MATAV. So I would say 103139. Okay, that is the high. All right, so let's assume you do not get into this trade on time, and the low is 102995 minus 102995. Okay, so and then you make a total of 144 pips on this particular move. Yeah, and this is a strong move anyway. So 144 pips compared to that 99 pips that this moves in a day. So what do you want to do? If you look at this, if price, say for example, if I go on 4-hour chart now, yeah, this is in this 4-hour chart. On Friday, the date of Friday is, sorry, 20th, 19. So Friday start from here. So let's assume this low that we are seeing here was the first 4-hour low that we encounter, right? So what we want to do is, maybe we did not join on time, maybe we went higher. We want to poke a line underneath the low that we found, yeah, on that particular day. And then on, if joining here, then we know that we are expecting at least 99 pips. Okay, so we know that our 99 pips is somewhere right there. Let me bring it back again. Let's say about 100 pips. Okay, this is just an average. All right, once you have the value of that average, you can then play with it. All right, so 99 will be somewhere around there. Okay, all right, and look how beautiful this is. So we've moved Yeah, we've seen this break and we move, and this is where we are expecting the day to get to, which is somewhere around there. Yeah. So when we have a move all the way from this low and we get into the 99 points, we know already that if we're joining the market on this particular price, we've almost finished or finalized the move of the day. We are lucky to have a little bit of bonus on this bullish run that moved all the way from here to here, which is about 46 points. Okay. So with this 46 points moves now, you know that that is excess that you incur on a trading day. Yeah. But you know that your average move is 99. And that 99, if you get here on this particular day and price is moving, we'll be trading this with caution that okay, I've moved the entire range that I'm supposed to move in a day, and now I'm moving a little bit above it. Even if I get 10 pips move or I get 20 pips move maximum, I'm all right. I don't want to look for 100 pips after this average move. Yeah, if I'm approaching trading on a day like this, whereby the move has already occurred, I don't want to go into trading expecting 100 pips. Number one, I'm late to join. Number two, the price has already moved. And number three, I have to respect that the market has already done what it's supposed to do for the day. So why jumping? There's no need for me to jump in more than have a little bit of patience and know that, okay, I'm going to be looking for a good location to begin my trading the next following trading day. Okay. And this is what you see on the 4-hour chart, that move above that significant area. So going into the new day, going into the new trading day, what you will be expecting is simple. 1 second. Going into the new trading day, what you're going to be expecting is simple. Number one, you've closed above here. Yeah. And number two, we close strongly above here, right? Number three is we know that our weekly shows us that push up, that buyers literally buy and push price up during the week. Yeah. We have a little structure here that we've moved above just right here, and then we pointing higher. Does that mean that the trend has changed and then we're going to be seeing a move high? Well, on a 4-hourly chart, we can literally say that we have a trend change on a 4-hour chart. Then we now look down into a daily chart and see whether we have that same particular trend change. And if you don't know what trend change is, we're going to be discussing that in the new coming trading analysis that we're gonna have. So what we'll see over here is on daily, look at the way the wave is forming. Price moves in waves, so we move down and make a low, we make a lower high, right? So we push down and make a low, we make a lower high. Compared to that, we push down and make a low. Now we make more or less like an higher high. But the close of this high that we're seeing here on this particular day that occurred, that close was literally way below this high zone. So we will say consider this as negative. And then we move down now, and then we're seeing the buying impulse coming in. There are a couple of reasons why we are seeing this buying impulse. Yeah, this particular area or region, it's a known good trading location, so you can expect reaction. All right, you can expect reaction of trader, but this move has not constitute any trend change, any major daily trend change. Okay, which means the trend is still down on a daily chart. We're not going to be seeing any trend change until we move and close above this particular area. All right, which is a previous high. But on 4-hourly charts, we need this area to be 133.62. So that will be our next challenge on 4-hourly charts. Okay. All right. So we are looking for our 4-hourly chart to take us down to an area such as, one second, where is it again? Weekly. So we're looking for it to take us to 133.62. So if I go on 4-hourly chart, where's my 133.62? So 133.62 will be somewhere around there, and that will be our next projection that we are looking for. So the reason why I don't have it is because I haven't cleaned up the other chart. So let me use this chart and say, for example, this is my new hour chart that we'll be able to see it clearly. All right, so this is where we are looking forward to go. All right, and how are we gonna get there is the next thing. Okay, so when the market opens, we know we've closed our 4-hour candle well above this area here, yeah, and you can see the test of that particular area, yeah, and this is what things like market profile will do for us as well. One second, which we will go there. Indicators, volume profile, session volume. All right, so I've done it twice. All right, 3 times in fact. Okay, one second. Let me go to settings. So POC. So that's POC to right. So yeah, extended. All right, so these are volume indicators. What this does, I will show us this again separately. What this does is it shows us where the volumes are concentrated on this on this currency pair. We know fully well that we are expecting that the dollar needs to break a particular area, yeah? All right. If the dollar refuses to break that area and start to drift down, it will in fact help the pound dollar to push up. Okay. So these are the kind of things that we're going to be watching hand in hand. And the way that the pound dollar is going to push higher is it's going to be looking for areas of volume that will attract it move higher. All right. So look at this. When you have an area such as this, which is move above, we've got this area. 1 second. If we extend it forward, make this a bit thicker, and then change it to, no, I'm gonna change, I'm gonna leave it as it is. Come on, I just want something a little bit different. Yeah. So if I, right, look at where price bounced back. And the same thing applies to here. You're gonna extend it forward. Almost the same area. Okay. And we're looking at what that is showing us is, second, extend further. Here we are expecting the peak. All right. So We have a couple of volume area above where price is currently, which is good. These are areas that when we go into Monday, we know that we're going to encounter a little bit of a slowdown before we literally just push higher above here. And if we manage to just push higher with force, we know that the buyers are very strong and we are pushing higher in the direction in which the buyers are the one literally pumping this price up. So we look into all this congestion zone as a confluence of indicators together. So my next good trading area is, if I look at here, I'll be looking at an area around there. You can see how this area matches up together 1.3292 and 1.3290 area. And then we have a volume around there. So I expect that when price gets to area like this, price is going to find resistance. Yeah, and in this area, I'll be expecting that I can make a little bit of money from if price push up and met that particular volume resistance that's pushing price down, to be able to push price down a little bit for me to and give me rooms to make money. So I know those important areas. I know how I can capitalize on them. I can join them together to look for further trading locations. So, and these are the places whereby I'm going to wait for price to literally get to before I act. I'm not going to be chasing price anywhere else. I will literally wait for price to get to all these areas and then look for a rejection candle. Yeah, and this is a good thing when you can do this analysis. Look at that. You can literally see that rejection candle. So now you have 1, 2, 3, 4 areas. Now you have a confirmation based on price. That price is rejecting that area, and then what happened? Price literally gives you what you deserve by understanding and waiting on that particular area. Price literally moves down almost 330 pips from that area. We have patterns that tend to repeat itself in the forex market. Price will get back here again and then still give us a room to profit. Okay, I'm not going to say that, yeah, maybe you get 334, and I'm not going to say that maybe you're not going to get 334 or more, you know. But now you have an important clue. You have an important area whereby you have a couple of things together, joining together, that's joining as a force, that's showing you that when price gets to this particular area, and these are the areas where you want to pick your trade from, these are the areas where you know that once you see the reactions that you are looking for, and what are the reactions, now you know how to put your lines on, right? On weekly. Have we done daily? Let me quickly look at daily. Right, so this is what we're going to do on daily. We're going to look at the last 4 days, right? And pop a blue line on top of them. 4 days high and low. So this is number 1. So I'll make this blue. And what would this be? A solid one. I know that number 2 is right here. So price has tried to move above that, so I wouldn't kill myself about that, which is good. Number 3 is I'll choose the last for this 1, 2, 3, 4. This area here, yeah. Number 4 is gonna be somewhere here. Number 5 is gonna be somewhere here, and this is how the chart becomes what it becomes. But each and every line has got its own meaning, and they are so meaningful to me when I look at them. And basically, this is just trading with horizontal lines. So I know that, and that's my number 4. Number 6 even. Number 7 altogether, there will be 8. And number 8. All right. So if I go back to the 4-hour chart, Now I'm building an outlook into the future. So I know that when the market opens, and this is the way that the speculators approach the market, this is how they literally set the price to move, okay? They will look at the recent areas that is closer to price, all right, which is that area there, 130, 139, and then this area here, 131.26, okay? And these are the areas whereby the speculators want to go and test. Yeah, they want price to move above it to see the reaction, whether they will find buyers that will come in and start buying, okay? If they do not see buyers that will come in at the test of this particular area, then they know that the price is so expensive and price needs to come down to look for buyers. So what would then tend to happen is we're going to see the sellers they will start pushing price down to attract more buyers in any area. So buyers can come in here, buyers can choose not to come in, buyers can come in around here, buyers can choose not to come in, buyer can choose to come in around here, buyer can choose not to come in, buyer can come in around here. So wherever we see the buyers, and how do we know the buyers? How do we know when the aggressive buyers comes in? Okay, that's the next thing. Is you want to be seeing a move like this. You want to be seeing a push like this that shows you that price went down. Yeah, went to go and met some aggressive buyers that push price back up. Okay. In this case, let's look for more aggressive buyers tails. On a day like this is an aggressive buying that comes into play and give us this, what we call the bullish engulfing. And this bullish engulfing engulf 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, almost 11 4 hours. That's 44 hours. 44 hours is more than it's almost 2 days of movement. One single move, just capitalize on it. So on this kind of a move, you're not expecting anything more than further push up, okay, until you meet further resistance. And you can see that's the reason why we get this move, all right, and this push up. And instead of also have a follow through to carry on going, the moment you have a close of a 4-hour candle, you are expecting a continuation. If price comes in and you do not see continuation, that's a sign to show you that price is not willing to continue above. All right, so what we are looking for is those aggressive buying instances. And we can see what I wanted to show us is in terms of a tail. We look for them in terms of a tail. And what's a tail? A tail is that particular doji that is going to be pushing price higher. So when we see a doji like this, but at the bottom, 1 second. A doji like this at the bottom, a doji candle, an indecisive candle like that, or a candle that just shows us that price is confused of moving down again, then we will know that that is the time to buy. So when price, what we want to see is speculators will try to test above here, yeah, and we have a big day previously, so they will try to test above this previous day high. Once they test above this previous day's high, they are looking for continuation. If that continuation did not follow through, then the sellers will take advantage of price and start to push price down, okay? And they will be targeting any of this area here, this zone here, this zone here. But these are the most important zone where you have two congested together in the same area and all these structural areas. So this can be an area whereby you are expecting a bounce. So what this tends to give you is to kind of give you a roadmap on a chart for you to know where you are expecting things to happen, okay? And that's what you need. Once you know that, oh, price is now below here, the only thing I want to do is I want to be a seller when I see the confirmed selling efforts, okay? And you know that that is going to push down and follow through to a certain extent. If you are looking for 10 pips or 20 pips in the market as a newbie, at least those are the kind of targets that you want to be targeting first of all before you start looking at things in a longer term and looking for 50 or 100 pips, which we just then come true to you as you carry on practicing. So you can't afford to give up. Okay. So, and now we know going into Monday, which is the morning, Monday, the pound dollar, what we are expecting is it's going to do this pound USD. Wait, let me show you this. This is how you now use this tool. Going into Monday, this is pound USD. It's going to move 99.26 on the average. On Monday, what does he actually do? So on a Monday, this is a Monday, yeah? And that is the first day of the week, yeah? Volatilities in pips, pound US dollar, that is strong Sunday stroke Monday. This is Monday stroke Tuesday. This is Tuesday stroke Wednesday. This is Wednesday stroke Thursday, and this is Thursday stroke Friday move. All right, so we're gonna have at least about 85 pips tomorrow. It moves the most on Tuesday, which is about 117 pips, and then 93, and then 107, and then 101 for Monday. Okay, so we're not expecting more than 85 pips at least on pound dollar tomorrow if there's going to be a move. So literally what we can do is we can project, say from here, and say this is where the price closed. Let me look for 85 pips, and then you know this already that, okay, I'm looking for 85 pips. I do not expect the price to move more than this place. And this is a good area for you because you have your monthly line there. You know that when price gets here, there's possibility that price can shift down or price close above it. And then at the same time, while we're doing that, we know that we can literally place a line around there, yeah, for our targets all the way up. And from here as well, we can see our price can move 85 pips. Range downward. And then we can put this line there. And we know that this is our level playing field going into Monday. So price, if it's going to move down, it's going to move down towards this area. And look at what we have there, significant area. If it's going to move up, it's going to move up towards this area. Look at what we have there, significant area. And then, and we are not expecting more than this move up and down, whichever direction that price chooses to go. So we already build in our mindset, in our mind, what our expectation is. If we get more than this, it's additional, but we know what we are expecting using the math.net. And that is why that tool is important, so that you know that when price is coming down and it has get to almost here, this is not a time whereby you want to start selling heavily. Okay, you should have started selling heavily from areas like this, yeah, and then to be able to capitalize on the gains down here. But when price is going down here, well, because you don't know and you start, oh yeah, there's a sell, let's sell, but the market is already running out of steam. So there's no need to sell heavily in that particular area. And that's the reason why. That's the reason why we will realize that majority of signals that we take, and we take them late, we would have been taking them when price is about to turn. Yeah, that's where we'll be taking them, when price is about to turn. Okay, and that is what we do not want to be doing. But if we have this and answer with this to the truth, then we know that, okay, I still have room, I still have room, I still have room. And that is the difference between someone that's looking to do this in a professional manner and someone that's just jumping in and then complaining about, yeah, the signal doesn't work, and why does it not work, and all these kind of things. But each and every day when we wake up, we're going to be building ourselves little by little on a journey to be able to multiply money. And that is what we are here to help people to do. That is what we are here to help people to capitalize on. All right. And this is it on pound dollar for me. I literally know what I'm expecting in the plan going forward. I know that the speculators will want to choose to test this area. And then if they fail, I know that price is going to roll back down. But if they do not fail testing this area, which means the first 30 minutes when the market opens, I want to see the reaction around there. Yeah, if they fail testing this area, I know price is going to roll down. They want to come and test all this area as well and see whether they will continue to find weakness. All right, and that is it for pound US dollar. So I believe today, yeah, we've spent almost 2 hours on the call. We haven't taken any break whatsoever, and it's good to be having break, but because we have a bit of technical issues, we couldn't get to have breaks. I believe if there's nothing that we learned today, if there's something that we learned today, we learn how the range with which prices can move up and down works. I believe we learn how to use horizontal line to our advantage. Please understand that this requires a little bit of more teaching, but this is a class that is running for 2 hours, and look how much we've got to share. And with this amount of information, I don't want us to have information overload. I just want us to be opening our eyes little by little into how the price works, into what we are expecting the price to do, into how we'll be able to approach the financial markets going forward. And this is literally a golden opportunity for me. For everybody that tuned in today, I will say thank you so much for joining me. I will say I so much appreciate the time that you're taking now to be part of this. If there's one thing that I would really want to analyze is I want to quickly look into the US dollar Japanese yen. I believe something magnificent is happening there. I'm not going to take much of a long time, but I've got a friend of mine that requested for that. So I'll literally look into it and see how best we can approach the dollar yen going forward. So what I've seen so far on here is these are monthly charts, and so far so good. Yeah, I think someone talked about Euro USD as well and dollar Swiss. Okay, right. So let me quickly point out. You see, let me give you this trick. Cancelo, are you still there? Thank you. Ruth. For Cancelo, are you still there? If you are there, then I'll give us this tip. It can literally work for us. But if you're not, I will give tip some other times. For gold, okay, no problems, Roots. Yeah, I know, Roots, you're there. So we can do your gold then. If you want, Cancelo probably is gone on an appointment or busy. So we look at gold instead. Yeah. All right. So because I love gold, let me quickly delve into gold. All right. So this is the gold market, and as you can appreciate, gold has been appreciating for a very, very long period of time. Thank you. You want us to do Ichimoku? Roots? Oh, sorry. Right. So going forward, this is the gold. We can see it's been appreciating for a very long time. And then what can we see? We make a high here, yeah, and try the price comes down and find this support right here and then try to push back up. Okay. And then this is where we have the failure to make a new high. All right. And since then, since this consolidation phase that we have right here, and then we have a right here too. Sorry. All right, so price has broken down, okay? And then what do we have? We keep drifting down, okay? And then now we push up and we find ourselves in this particular zone. So basically, this is how I'm going to be approaching the gold going forward. I'll look into my structures, all right? I've seen what the chart is like. My first question is, what is the major trend? Yeah. So if we do that, question, major trend, that's number one question. Number two will be, what is the market condition? So you can appreciate this market condition is literally ranging as well. Okay. And there's a way to approach a ranging market, different from the trending market. Number three is there any trend changing pattern? Okay. Number four. So if we look at this, if I say what is the major trend, so the price has been going up, yeah, over a long period of time. The major trend, you can use the trend line to find out what that is saying for us. We can see this is now 1 second. Forget about space, and this is where we are right here, right now. Sorry. So this uptrend is going to be looking for bounces off this particular trend line that is pushing up. 1 second. Let's look at another inner trend line. Okay. So this is another inner trend line. All right. And then with this inner trend line, that's the recent trend line that price has been touching 1, 2, 3. The third time that price has touched this inner trend line. Okay. All right, so with gold now, what we want to do is we know from our question that the major trend is up, all right? Although price has declined considerably, what is the market condition? We are currently ranging in this zone. That's where we've been ranging, okay? And there's a way to approach ranging market, which I'm going to teach in a moment. Is there any trend changing pattern? Okay. The trend changing pattern is when we look at where trend will definitely change. Okay, on this market, the trend is either going to change going up, yeah, when we close above a particular area, and that number is important for us to know. Okay, and where is this number? If you look at here, there are different ways in which I approach it. Look at the way prices close, yeah. Look at where prices reach and close, and look at where prices is failing to close above. So all around there, this particular area where I am, I'm going to put an horizontal line there. Right. So let me make it the monthly color, because eventually we are looking at a monthly chart. But look at it. We are failing close above here. Yeah. Look at, we push up to it, we bounce back down. We are playing around there. So this is the area whereby we are literally whipping off from. All right. So we need a close above all these zone. Yeah. So this is how this place will become a zone for us now. Above all these zone. And where we are looking for, bear me a second. To be a full buyer, not that you cannot be buying retracement and all this little. But to be a full buyer and know that when price move above here, it's literally going to move strongly. Sorry. Like this. All right. So what we're going to be looking at is, we know to be a serious buyer in gold, price needs to move well up above here, and then that is where we're going to be buying in full force, because it has literally shown us. But before we get there, where are we now? That is most important. So what I'm going to do is I'm going to squeeze this chart a little bit to see whether I can find anything that's of important structure where the price is. So the price is right here, right? Now, the first structure that I'm looking at is I'm going to be looking towards this side, okay? And that's exactly where we are. So we are here. This particular high is a significant high, whereby when price gets there, price push down. And this is strong push down because it's a monthly chart. Price literally push down significantly. So I'm going to pop a line on here, yeah, and I'm going to make it a gold, a dark brown line. All right, and I'm going to note that number because that's my structural point for the gold. And anything that happens around that area, if the price is above it, I'm a buyer. If the price is below it, I'll start selling. Okay. All right. So I know this now. The high is in 1226.30. All right. So if the price continues to stay above 1226.30, yeah, I'm going to be a buyer. And I'm going to drill this down into a lower time frame for us to know how we're going to work this out so that it's going to be a lot easier for us. All right. And this is gold going forward. Right. So I'm going to pop. I'm going to pop on the high. I'm going to pop an horizontal line there, and on this particular low, I'll pop another horizontal line there. Yeah. And the way that I like to do it is I'll check the last 4 monthly highs and lows. Okay. Because those are my roadmap. Those are areas where price has been showing me where it stops, and then on the low, and where it goes or travels, where it stops on the lower support, and where it travels to on the high as resistance every single last 4 months. All right. So 1, 2, 3, 4 till this one. The current month is my level playing field. Yeah, so I'm not going to pop anything on that because it's not yet complete. I'm interested in the completed month. Okay, so what I'm going to do next is I'll look into the weekly chart. All right, and then I'm give an entry, buy and sell area using this. All right, so this is my last week on gold, and then I'm going to pop a purple line there on magenta. I love magenta. I get to understand that it is the color for money. Thank you. All right, so the next thing I'm gonna do is look into this, and I'm gonna give us a very good low risk entry exit on this gold. I didn't get to do that on the arm because there's too much to teach and talking. But yeah, I'll make it worthwhile on gold. So we can look into this going forward. 1, 2, 3. The last 4 is right here. 1, 2. I'm just gonna make this one smaller for us so that there are a couple of questions around there. All right, so it's building up itself, and it's building up itself so nicely. Okay, so the last thing that we want to see here is we are looking at all the swings using our weekly charts. We know clearly that we have a swing low here, then we swing up to here, then we swing down here, then we swing up to here, and now all these areas of support. Yeah, look at these areas, look at this area, look at this area. But what we will do with these areas is pretty simple. Yeah. when price comes all the way down, yeah, look at them bouncing off here, bouncing off here, bouncing off here. You can appreciate the fact that when price comes back there, yeah, it literally bounce back up on weekly chart, all right, and then we close above this important structural, significant points on gold, and that significant point is 1226.30. Okay, so I will now say my structural reference point, yeah, structural reference point. Okay, so let me see there. Sorry, I've done gold is and I'll show you how to make good use of this reference point. Okay, so if I say structure, I'll go to okay. First of all, I'll now go to a significant reference point. This is, I'll go to daily quickly. I'll do the same thing, yeah, and I'll now drill down. I'll be gonna trading the gold going forward into the trading day. So we find a bullish candle on that daily chart. There's a new gold is going to be going up. Well, we have a little trend line right here that's suggesting 1, 2, 3, 4. Let's say 4. So the only thing that I'm going to pop just for confirmation again, just for confirmation, is what you normally used to, which is the RSI. I want to look for divergences, right? So this is literally covering up our whole line. Sorry, our break line. No. We know that it's there and we've closed above it. Okay, so this is a daily chart now. All right, and literally this daily chart from daily perspective, you can see that the trend is literally down. Okay, the trend is not going to let the trend change until we are above there. All right, so this is where we are expecting trend change on the daily chart for gold. And we need the number as well as 1260. So I'm going to say trend change. Maybe time frame trend change. Yeah. That is if we close properly above it. Yeah, we can get there and just test it. It's 1265. 90, and I'll show you how to use all this area in a minute. Okay, the most important thing is just to set up the chart first of all. All right, so this chart is set up. We know that weekly, the daily, there's a bullishness coming into play. We will look into 4-hour chart now, and then we see how our chart closes. Can see that, yeah, we're moving up. We have a bullish close on daily, but we start to have a small 4-hour candle around the same area. This particular area has been tested so many times. Okay, it's not a problem, but it's just something that we have to take that, okay, where is the momentum? Yeah, so what I'm going to do is I want to see whether this is just an impulsive move or a consolidated move. So I'm going to use my indicator. monthly. Yeah. So I'm gonna use Linda. Hold on a second. One thing I want you to understand is we traders. So what is Linda's name? Linda Bravaraski settings. Yeah. So it's gonna be 3, 10, 16. Does work, to be honest. I can change this to blue. Okay. Let me see. If someone wants to join in, let's give them the link again. Let's see. All right. Okay. All right, so I'm back. So what can I see? Basically, I have the RSI here on 4-hourly chart now, and take note of this, yeah? This is our 4-hourly chart. This is a low right here. I can check and see if there's anything called divergence, yeah, whereby price is making a low, and then the indicator is telling us contrary. All right, so just a little bit, tiny little bit, not so much visible divergence. Yeah, and we have a low here. Okay. So what we have here is we have divergence on MACD. Okay, we have that divergence on MACD. The signal line is just about to cross the 0 part, and then I can see that this push up is not just consolidation on daily, it's actually a momentum push up, okay, because we are above, so which is good. So going forward on the gold, what we're going to be seeing coming into the new week is we have a couple of daily highs and low areas above here at 1232, okay, and at that particular area, we are expecting to be a buyer. I want to put everything together because this is parallel. Must be our trading chart is going to be. Yeah, that is. Right, so what we're going to be seeing going forward is this. I can open a little bit of ELs as well to see precisely what we're going to be capturing going forward, just to help the analysis and they have a little bit of more strength. So the kind of BME that I use, which we talk about them in the nearest future, have time. So look into that. So BME, make it blue, pop that in. That's for my volatility to know how we are dropping down, and I'll use 36 here. My scalp is going to be orange here. Now drop it down. Wow, look at that. This is telling me something. Okay, and I'm going to use 200. Yeah, look at that 36. As it drops down, this is where the price is currently. And when I'm talking about those small candles, I now know the reason why I'm saying those small candles. This is going to be the 200 exponential moving average applied to the close. That would have been there, and it's up there. And then this now will be my 63 exponential moving average. This can make it yellow. Okay. All right. So I'll close this. So what I can see clearly and glaringly is this. And I'm going to give it to you. I'll give it to you in a minute. There's a caution to start buying this right now, okay? And everything is even showing clearly. The first thing that's showing me there's a caution I see clearly, first of all, was when I pop in my 36 EMA. That price is literally at 36 EMA. What tends to happen at 36 EMA is it's more or less like a retracement zone for me, yeah? A retracement zone for me. And that 36 EMA retracement zone is an important retracement zone. But what I tend to like about what price is doing is if price tends to move down like this, yeah, and move up and did not give me this little bit of higher low, which is a stepping stone to push higher, to make a new higher highs, which is where we are currently, then I'll be seeing this as overall very, very negative, okay? All right. But right now, because we have the stepping stone here, which is the low, and then this is a low, and then what we're gonna see again is we have a higher low right here, yeah, and then we push up, and we are a little bit higher than here. But because at a resistance zone of 36 EMA, we're expecting price to literally retrace down a bit, yeah. Yeah, and if this market fail low we continues to hold, I'll be expecting to be a buyer if we literally manage to close above here, if price drifts down a bit. Yeah. So the expectation of the gold market is this. I'm expecting price, because we are this particular zone, to drift a little bit lower. Yeah, and then give me a little bit of discount to be able to buy somewhere around this particular structural significant point, which is 126.30. So I'll be a buyer. Yeah, this is I will long gold. I have 2 entry points. Long at 26.30 if we close above it. Is a reaction that I'm expecting. Yeah, if we close above it on hourly chart with a bullish price action when we retrace back to it. Okay, right, so retracement is imminent. Right, so that is number 1. Yeah, number 2 is I'm expecting price, because are closer to this. I'm expecting that at the open, when we open, we literally push up. Yeah. And I'm not going to take the first buy, yeah, because that may be a fake out. The first buy is just going to be a speculative buy that I want to check this area. If it is not strong, if it's impulsive, if it is very strong, then it's going to push up way higher and price will continue to go, okay? But yeah, we can see a breather test whereby price is going to push down, yeah, and then drift down and then push and back up. Let me show you my expectation here. So we have this market failure. All right. So I'm looking at this wave now. I'm looking at the charts like this. We're gonna have a wave here that created a new high. Sorry guys, I don't know that we're gonna go and can't stop, but yeah, don't worry. So we made a new, this is a low right here, yeah. I kind of sap your patience, guys, to be deadly honest with you. And this is a strong, this is how you're going to know the people who are really going to excel with this opportunity. A few people that stays on and literally want to say this to the end are the ones that's going to catch something great and they're going to be able to excel with this opportunity. So make a new high, all right? So what we are expecting, because the market has closed, is this high, don't forget that it can push up and make a new high. And if it literally push up to this area, look at what we have around here. So this can be a good little bit of a selling zone. But what are you selling when you are selling it? So literally you're thinking of selling something that can work like this, that can push down like that. Yeah. So you're not thinking of selling over there strongly to form a push down and make a new low immediately. Okay, we can have a scenario. All right, although we know that we haven't encountered a trend change yet on the daily, this is our trend change area, but because we have a little bit of a trend change on the 4-hour charts and respecting this 4-hour charts, this is our trend change area right there. So trend change, 4-hour trend change, let me mark it. So 4-hour trend change. What you're gonna use that for is gonna be your midpoint. It's gonna be at 12:29:49. 12:29:49. And when you can see price like this and you can manage to be trading like this, you are trading on informed view. All right, so you know that when price starts to come down and roll down below here, you want to be a seller between 12:29 and you're targeting 12:26. Okay, if you are, and at 12:26 you're taking a little bit of profit out to see whether this price is going to go down. Remember, there's no, I cannot specify to you that this is where it's going to stop. There's a likely possibility that it's going to get there and stop if a geopolitical serious news breaks out, or if something happened in Australia, or if something big happened in Canada. Those are the commodity countries that affect prices of commodities. Then this thing can literally shoot up beyond expectation and then literally shoot down beyond expectation. But we have an areas whereby we can gauge price movement. So number 2 is going to be this. So we are expecting this retracement to move down there, and then if we see a bounce with a bullish candle, then we can expect continuation, because this has really given us a market failure somewhere around there. All right. So the next thing that I'm going to be looking at is this. One second. Hello. Speaking. Yeah, I'm good. Right. Do you mind if I call you back? Because I'm currently running the training now, but I'm gonna definitely call you back after. Yeah. Okay. No problems. Yeah, thanks. Right. So what do we have is we're looking at how we're gonna approach this. We are going to be a seller. We're gonna shoot 122, 26, 30, and that doesn't mean that that'll be the exact XR we're gonna be looking at. If we have an hourly chart close below it, okay? That's the reason why I like to specify. So when you have an hourly chart close below this area, and the next candle gives you a follow through, look how much patience you need to have. And these are the reason why you can drill down. Gives you a follow through, and then which means this candle remains a selling candle and it's bouncing off this area. It doesn't want to go above this area. Then you become a seller to target. Yeah, and you sell some. If we break 12, 11, 5. So 3 structural short will be at 12, 11.65. Okay, so you're not going to be looking to buy this immediately because you know that when you buy this without a little bit of a move down, you have this to encounter above here. All right, so you have this to encounter above here. So but you will be able to, let me copy this into the chat room in case you need to give this and now this to yourself. Right. Well, all right. So I believe for good, what we have here is informative and it will help us a little bit going forward. We know full well that the trend is still down. We will favor the shorts more than the buying, but what the 4-hour chart is telling us is we have a chance to go up, okay? And the chance that we have to go up is we will be looking at this swing area to target. All right, so this is going to be our target. If eventually we have a move down and then we resume this trend up that I wanted to start now, then we're going to be looking to target this particular area of 1265 literal, and we have the 200 very close to it as well. All right, so that is it for gold for now, and I hope you can understand and benefit from this analysis and roots. Okay, so what I wanted to say for cancel level on Euro USD and dollar Swiss is basically this. And the Euro USD and the dollar Swiss, they are literally more or less like opposite currency. As you can appreciate, the euro is in the eurozone. Dollar Swiss is in the it's in the euro as well. So the trick that we use in trading this is this. 1 second. Oh, why I have so much like if the euro is going up, if the euro dollar is going up, basically the dollar is going to be coming down. Okay, So if you are right in taking a trade in the euro, yeah, you can use that opportunity and it's a bad trade, or you can literally just start to sell the dollar Swiss as well. Okay, so which means you can make money on, if you are buying euro, dollar, and you are selling dollars, those two currencies in time. And look at this. Let me do this. Let's do compare. So let's say USD. Let's compare USD CHF. And you're going to see the disparity that I'm talking about. So as you will appreciate, I don't know if you can see this clearly. Let me bring it up here like this. You can, this is a mirror image. When this is dipping down, this is pushing higher. When this is pushing higher, this is dipping down. When this is pushing higher, this is dipping down. When this is pushing higher, this is dipping down. So when you are selling this, you are literally buying that, and you can make money both ways. You don't, the only time that you will be buying the euro dollar and you want to be buying the dollar Swiss instead of selling it is if you are playing hedging. Yeah, if you are hedging against, and that's it. That's a topic for another day. But literally, for you to make money on euro dollar, if you are right in your direction that it's going up, then literally you just have to be shorting the dollar Swiss as well, and then you realize that quickly you can make a good return. And if you have someone to show you this, you may find it difficult to understand or know as quick as possible. So for Casolero, that's a tip that I wanted to share. I believe what I'm going to do is I have another meeting at 8 o'clock. So I'm going to be cutting this short, but I'll do some other analysis on all of this charts. What you can do is subscribe to the channel, pop in your email address in there. I will do chart analysis, and I will endeavor to send the out for people to benefit. So I'm going to leave the chat room for about 5 minutes before I actually close for people who want to pop in their email address. I would like to say thank you so much for joining me today. Thank you for this opportunity, and I wish every one of us success in the new trading week, and I'm expecting us to go through what we've learned today over the next couple of few days to see how they developed, and then I will try my best to be pinpointing more entry and more exits going forward in the chart analysis. Thank you so much for joining. I so much appreciate your time and effort. Thanks. I'll see you soon. Thank you so much for staying all through. God bless. God bless. Take care of yourself. I wish you best in life. Thank you. Let me stop the recording now. It's 2 hours 42 minutes. Stop sharing screen. If you want to leave your email address, you can do so. I'm going to stop broadcasting right now. Thanks.